Hello and welcome to Impact, the California MBA podcast, where we break down legislative and regulatory issues shaping the mortgage industry. I'm Paul Gigliotti, CEO of the California MBA, and today we're discussing AB 1018, a California bill focused on regulating automated decision systems, including AI, and why, as drafted, it could provide unnecessary impact in California lenders and consumers. Today, I'm joined by Nick Pabarcus, Managing Director of Non-QM Sales at PennyMac, a company leading innovation across lending channels. Nick, thanks for joining us.
Appreciate you having me, Paul. Thanks.
Okay, so AI is back at legislation on the agenda in California. It was there in 25. It's coming back again in 26, the same bill. It's a 2-year bill. And what we're seeing is the challenge that policy discussions often treat AI as new, right? They're saying that AI is brand new to this industry or other industries, when in fact in mortgage lending, automation has been part of underwriting, compliance, and fraud detection for decades. I believe starting back in 1997 when AUS was introduced, which is a form of AI. Nick, in 30 seconds, how is AI actually used in mortgage lending today?
Yeah, it is. It is all throughout the origination, fulfillment, and servicing process. Anywhere from kind of the front end. It almost depends on what phase that you're talking about. But with the borrower engagement and application process, right? Loan officers are using AI for virtual assistance, scheduling that kind of task. Adaptive applications, right? There's a ton of services out there that use AI to actually get the borrower information in and get it in an efficient way on the app process. But when you get into fulfillment, right, I mean, it's huge. So you've got an OCR tech that handles your indexing, services like a Prudent AI that will actually calculate income, whether it be a bank statement income or a tax return income, and there's services out there that'll do that. You had mentioned all the way back to 1997 on the automated underwriting decision. Obviously, a huge part of the lion's share of product that's done in the marketplace today. And that's not even withstanding the servicing components, right? So, predictive payment modeling, borrower interaction, all of those things are embedded with AI. It's cradle to grave in the mortgage industry.
Yeah, absolutely. It's amazing when you break it down. It is cradle to grave, all the way from the top to retaining the consumer and supporting them after the loan is closed. Um,
Absolutely.
so AB 1018 was intended to protect the consumer, as most assembly bills are, but it applied broad requirements across all industries without fully recognizing how heavily regulated mortgage lending already is. It's one of the most regulated industries in the US economy. So, Nick, from your perspective, what is the biggest operational concern for lenders if a bill like 1018 is implemented without industry nuance?
Yeah, I certainly think that the folks who are authoring the bill have the right place in their heart, sort of scheduled, right? Where they're certainly trying to advocate for consumers. I think that's a good thing, but not fully underwriting or understanding the underwriting process, the fulfillment process will lead to unintended consequences. And if they're successful in that, with California being ground zero for housing policy in the United States, you could certainly see other states adopting that provision and just simply taking automated underwriting out of the process would lump catastrophic cost onto the fulfillment of a mortgage loan and ultimately be put back onto the consumer. And that's certainly something that is that unintended consequence of trying to restrict AI in mortgage lending.
That's a great point. So we're talking about the ability or taking it from being an automated system to a manual system. One of the most concerning elements from my perspective of AB 1018 is allowing borrowers to opt out of the automated system, as you were saying. Walk us through briefly what opt out really means in practice for the borrower.
Yeah. Well, how the bill's authored is if a borrower can opt out of automated underwriting, that would basically push a manual process into the lender, who would need to evaluate credit, evaluate assets, liabilities, income, all of that in a manual way. That was done in, from the, as you had mentioned, in the mid 90s back through. What I think that they underrepresent is, if you're throwing a dart, the MBA pegs fulfillment costs around $11,500 per loan ish. Estimates that we've seen would push that cost up probably 50 to 60%. And if you're calculating it within an interest, just simple math, on a $400,000 loan, if you had your interest rate pushed up by 50 basis points over the life of the loan, that's $43,000. Okay, that's a crazy number, right? But it's not that crazy if you go ahead and think that I cannot have an automated process within the mortgage fulfillment space, and I have to take all that cost and go ahead and push it in. Ultimately, I think the legislation hurts the borrower that it's trying to help.
So not only would it increase cost, but does this actually, or does having the access to AI functionality as a lender, does that improve access to credit, access to the consumer?
I
Credit.
believe it does, and being able to have speed to a decision with accurate information, and taking away the manual the errors to that, it allows lenders to be able to widen the credit box in a very thoughtful sort of way, right? You obviously have to peg the delinquencies and a performance on any product that you're fulfilling. But with the AI component, we can make very good educated decisions on that process for sure. Now, it's not to say that all AI models are created equal. And if there are the biases in the algorithms that are out there, those absolutely should be inspected. They should be fixed. And we should have a process by which we go through. That would be legislation, depending upon how it's structured, that I could certainly support. But taking AI out of the process completely will ultimately just hurt the borrower.
Yeah. From my perspective, I see what it does is that it shrinks down the ability to really see if the consumer can repay the loan. And the way that 1018 is written, it further goes in to say that, the bill talks about fear of AI hallucinating or having bias to LMI, low to moderate income
Yeah.
consumers. And when we look at the data, we can see that, IMBs are responsible for lending to 83% of LMI areas. So with AI and automated decisions that we already utilize, we're actually utilizing those tools to break down bias, right? And to really look at if the consumer has the ability to pay the loan. That's the ultimate function of these tools. And can you make the loan?
100%. 100%. And I think that those automated engines have made that path for the low to moderate the income borrower even faster and more accessible. And with your non-agency products that you have out in on the marketplace, with your AUS, the jumbo, right? And then you're starting to see the beginnings of automated engines for the non-QM space for closed-end seconds. All of this stuff is about speed accuracy and ensuring that the borrower gets the right type of loan.
Yeah, that actually was going to be a question that I was going to bring to you, Nick. I know that PennyMac and you're leading charge. PennyMac is expanding across all product types, right? And PennyMac is moving very quickly into being able to offer non-QM products to their consumers, to their broker partners, so they can offer it to their consumers. And how have you seen AI provide support in bringing in the guardrails or rules to be able to lend in this two penny Mac new product
Yeah.
type?
Yeah, on the non QM side, it's interesting because it really is in its the infancy. There are a few automated models that are out there. Depending upon who you talk to, you'll get different results on how those have performed. The non-agency market in and of itself, but especially non-QM, is far from commoditized at this point. Each lender potentially has different max loan amounts, different LTVs, different loan level price adjusters for short-term rental, for no ratio, for foreign national. And I think that overall, what you're going to see in the non-QM space is an evolution more to commoditize the product,
Yeah.
where as more data gets available as far as the delinquency patterns, you'll see folks that compress other guidelines into kind of a fungible set. And at that point, you'll really be able to take advantage of programming of the AI in that sort of way. So,
Yeah.
so I
I
think we're just starting, but with the rate of investment, Paul, I think it's going to move pretty quickly.
Yeah, I agree. And again, from my perspective, it's more about opportunity than not, right? Having the usability of AI. So a bill like that, a bill that's being proposed, such as 1018, it hinders that opportunity and it overlays it with complexity that doesn't necessarily need to be there. We're going to end this conversation with this question, Nick, and this is a profound question, if I may say. If you could give lawmakers one sentence they should remember about AI in mortgage lending, what would it be?
Hmm. Gosh, that's a good. That's a good one, Paul, for sure. I think speed and accuracy give more opportunity for a wider borrower set, and
Yeah.
that's really what AI and these automation the engines do. It goes ahead and turns loans fast with accurate information, and it allows the reach into borrowers that they really would not be able to reach without those tools.
Yeah, that's very eloquently put. AI isn't about replacing judgment. It's about
No,
improving consistency,
right,
accuracy, and access, as we were talking about, um,
100%.
when used responsibly, right?
Yeah, absolutely. Wonderful.
Nick, thank you so much for not only participating in our Impact podcast, but for your service to the industry, for being a board member, an executive board member. At the California MBA, our role is to make sure policymakers understand how these systems actually work, so consumer protection doesn't unintentionally become consumer harm. Thank you all for joining, and we look forward to seeing you soon.